Welcome, listeners. I got a question last week about how to choose a trading system. Fantastic question. And in today's episode, I'm going to follow up on the answer I gave on the TFL blog. If you're not familiar with that blog, it's tfl365.com/blog. tfl365.com/blog. How to choose a trading system. I get this question all the time. What a remarkably good question it is, because it is the foundation for the way that we make money in the markets, of course, a trading system. And finding a trading system that's right for you is a laborious process that some people make way more difficult than necessary. All right, let's get into today's episode about finding a trading system that's right for you. On the blog, on tfl365.com/blog, and I'm trying to go over there now, and there's this picture of a guy sitting at his computer. Imagine a guy or a gal sitting at their computer, just like totally frustrated and super upset, and they realize after they look back at a trade that went wrong, they look back at it and they realize if they had just used a different trading system, everything would have been okay. And I want to talk to you just for a moment before we start this off. I want you to fight the urge to find the perfect trading system, because no such thing exists. There's really no such thing as a perfect trading system. And anytime you look back on a chart and you go, oh, dear Lord, I chose the wrong trading system for that setup, and if I had only chosen a different trading setup, then everything would have gone right. You get yourself into this nasty loop of terrible trading results because you make a switch and you change to a different trading system that would have gotten a winner out of the last trade that you saw. But then on the next trade that you see, you need a different trading system for that. And what I find, first and foremost, is that traders across the world, lots of people that I talk to, are deeply invested in trying to find a trading system that doesn't lose money. And I think that's laudable. It's praiseworthy. We don't want to lose money. I mean, it's the first rule of trading is to try to lose no money or as little money as possible. And then again, at the same time, the search for a trading system that doesn't lose money is really the search for something that doesn't exist. And whenever we assume that the trading system is the thing that's going to prevent us from losing money, we forget that we're the people implementing the trading system, and that you and we control our own risk. We control how much a trading system or an individual trade is going to lose. We control that. We have absolute control over that, minus slippage and broker problems and broker stupidity and power outages and whatever else. For the most part, it's not the system that controls how much you lose, it's you. And even if you run an automated methodology on a computer or algorithm or whatever it is you're doing, you still control how far out of hand you let that thing go. And I watch all the time as traders will allow a trade to move against them, and then they'll blame it on the system as it's going against them. Well, I got to let the system work itself out. And while it's true that you've got to let a system work its way out, you also just need to make sure you don't lose a lot of money. And you can cut stuff off if you want and then get it back later. And I want to make sure we all have an understanding about who's responsible for the trading system. I'm reading this book that was recommended to me. What a fantastic book. It's called The Power of Your Subconscious Mind by Joseph Murphy. And I'm going to back up here. And if you're watching the video, you can watch me going back on my phone on this Kindle app. And I'm going to find this place where it talks about belief. And this directly relates to the problems in finding a trading system. And I didn't mention this in my blog post, and I regret that I didn't mention it because it's such a really important thing to remember. Okay, so we're getting close here. We're getting close. We're getting super close. And now you're probably like wondering, where the heck? Here it is. All of your experiences, events, conditions, and acts are the reactions of your subconscious mind to your thoughts. And the primary thing to remember when building a trading system is it's going to be a reflection of your thought about the way the market works. We choose a trading system or build a trading system with all of our internal subconscious biases intact. And so that's why you find yourself just like doing the same kinds of things over and over again in the market, is because when you look for a trading system, you don't go out there looking for something that disagrees with the way that you view the market working. So in addition to taking control of the situation when you build a trading system, the second thing to remember is that you don't just watch yourself. Be on the alert for looking for a trading system that just reflects the way that you think things have always worked. Don't be afraid to choose a trading system or method or build one that goes against all of your deeply held beliefs, but that might make money. Like, open yourself up to the possibility that there is more to trading than just the way that you think that the markets work. All right, second of all, third of all, whatever of all, remember, Joseph Murphy says, it's not the thing believed in, but the belief in your own mind which brings about the result. Number 3 on this topic is that traders will, including me, will often find themselves believing in a trading system and that the trading system makes the money. Well, you make the money or lose the money. And remember, it's not the thing believed in. It's not the trading system that you believe in. It's the belief in your own mind about what is really possible that produces a result. This is why good trading systems in the hands of negative thinkers, pessimist thinkers, blind followers, doesn't do well. But a trading system, a mediocre trading system in the hands of someone who is determined to be successful will be fine. I've watched as traders run robots. I run something called the Finch robot and something called the NNS robot. They're based on the Trifecta trading system. And these two robots, they go out and they take trades or whatever. On the video right now, we can just switch over here and take a look at it. So there's no trade open here on one of the accounts. And then on the other account, it's running a ton of trades, and it's got a bunch of losing trades open in one of these accounts, just a ton of losing trades. But overall, over the course of this year, it's done really well. It's not going to make me a millionaire in 5 minutes. It's up about 7.5% for the year, trading micro lots, no risk, no danger of anything going significantly wrong. But the account's growing and it's consistent and it's working. And what I've found is that when this thing gets into trouble like it is right now on a couple of trades on the British pound and on the US dollar, Canadian dollar, I get involved because I don't believe that the trading system is perfect, but I believe that sometimes I need to step in and make this work. I need to make this trading system work. I need to get involved. And you don't ever want to lose sight of the fact that you're in charge of this process. So it's okay to step in on a discretionary trading system that seems to be not working appropriately and change some things around or reduce a trading size. And I hear all the time, well, if I change something, it's going to have a really detrimental effect. It's always okay to change something when something's going wrong. It's always okay to step in and deal with and face head-on problems with the trading system when it's losing money. It's always a good idea, on the other hand, to back away from a trading system when it's making money. Because traders tend to do two things really well. They let their losses run too long and they don't get involved. And they don't get involved soon enough on those losses. And then the second thing is they get involved too quickly on the winners and they cut those off and grab the money too quickly and they don't let things run their natural course. So those are 3 things to start with. And now I want to talk about elements in choosing a trading system. That could be a trading system for futures or for stocks or for whatever else. I trade stocks. If you're watching the video today, here's a picture of Alcoa on the screen. And if you're not watching the video today, I'll just describe to you what we're seeing on the chart. Alcoa produced what I call a bullish Knoxville divergence just right after earnings. And after earnings, it produced this bullish Knoxville divergence. And that was a signal to me that divergence after earnings is a great reason to take a trade. And that's what I did. And I have a target of the monthly pivot above. So I bought Alcoa because it produced bullish divergence. It showed a buy trade signal after earnings. And then I ride that up for a small, modest gain. If it does it at any other time, except for after earnings, I generally just ignore it completely. And that's a trading system. It's simple. I like it. I'm allowed to trade anything I want, but I like this trading system because if trade number one goes bad, then I just take another trade entry on the next alert that it gives me. And I traded PacSun, PSUN. Recently, I bought it at $1.43, and then I bought it again at $1.08 because it produced bullish divergence after earnings, and then it produced it again, and now it's finally beginning to move up. Sometimes they go in my favor immediately, and sometimes they take a little while to come around. But I like this trading system. So point number 4 is choose something you like to do. Just allow yourself to trade a methodology, even if maybe somebody else disagrees with it, or it goes against some book that you read, or something that you read that Van Tharp said, or that Alexander Elder said, or that I said. Just trade what you like. And as long as you get involved in your losses, as long as you take control of the system and you believe the power is in your hands, as long as you maintain control over the situation and you're trading something that you like and that it generally makes money, you're good to go. But what if you choose something that you like and it starts to lose money? How do you get involved, or why do you get involved, or what do you do about getting involved? So this picture of PacSun is a great example. So if you're listening to the podcast and not watching the video, let me describe to you the situation. I bought it at $1.43 and then it fell. But I bought only a very small position. I bought, I think, $1,000 worth of this stock on a $100,000 account. And if it goes against me, I've got more gunpowder dry and ready to shoot at this opportunity. That's what I do. That's how I contain the risk. Now, if it immediately goes in my favor after the trade opens, I might add more to the position so that any movement in my favor is beneficial to me and I can make a little bit more money. But my first objective is to maintain the opportunity, the privilege, the right, but not the obligation to add to my trade if it goes against me, get in at a better price. And you call this cost averaging, and some people disagree with it, but most portfolio theory that says buy stocks over time would agree that if you're investing in the stock market over a long period of time and it drops, you buy again, and you can't control when it's going to come back, and nobody knows where the market's going to go. That's super appealing to me. I didn't know if PacSun was going to go up or down when I bought it. I thought that there was a better than 50% chance that it was going to go up. But because I'm trying to contain my losses and I'm trying to deal with the fact that no trading system is perfect, I traded small to begin with an exploratory first position, and then I let it go against me, and then I got in again. And now I'm just going to let this ride. And then 70 to 80% of the time, this is going to be over after I take that second position. I do the same thing in the currency market with a trifecta trading system called the Finch, and it's a robot that runs. It takes a first position at a small trade size, and then a second position at a slightly larger trade size. And it has a really nice statistical probability of coming out ahead. Now, this is a live account that I'm showing you, but past performance is not going to be indicative of future results necessarily, and traders generally lose money, and there's a substantial risk of loss with trading. So this is a live account that I'm showing on the screen right now, but your live account results may vary, and I did get involved in some of these trades, and I'm not proposing that you buy this system for me or anything like that at all. But I'm just saying that that's been working out really well for me. And I don't ever trade a really large trade size, so when things get really, really out of whack or out of control, I still don't lose very much money. And so that's another consideration, is consider reducing your trade size so that when things go wrong or things go against you, you're not experiencing any giant frustration or emotional concerns or whatever else. You can also just cut off a losing trade as soon as it goes against you And you could also cut off part of your position if it goes against you. All of those are practical considerations that you might keep in mind when building or choosing a trading system. Let me see what else I've got here. Maybe just wrap it up here. Everyone puts too much emphasis on the choice of a trading system. As I said in the beginning, trade what you like. And then also look at trading systems, or when you build a trading system, if you tend to trade counter trend trading, take a look at a trend trading system or vice versa. Give it a chance, because you might find that whatever you've been doing is good, but there's something that doesn't come naturally to you that you might do better. And I recently built a trifecta trend trading system that takes these principles of divergence and whatever else and turns them on its head and trades with the trend specifically. And it's been doing nicely for me. Once again, I'm talking about a live account with very small trade sizes, and I turn it off and on. So it's not like I'm not promoting this to you. I'm just saying this is working for me. And when the time is right, Trifecta 6 will come out, and I'll include that trend trading robot in that system. But remember that choosing a trading system is not a life or death decision. That you choose it, you make it work. Make it work for you. We all get a system, implement, and say that doesn't work. And nothing's going to work permanently alone by itself. But you can make almost any trading system work if you add your own brain power to it and you get involved in it and you say the goal here is to make money, and I'm gonna strong arm my trades into profitability, or I'm gonna give up on them at a max loss. And what I mean by strong arming trades into profitability is get involved and trade small to begin with, so that if something goes wrong, you can cut it off and you don't lose very much. Or if something goes wrong, you can wait and get in again and maybe add one more position to the mix and reduce the average price that you've paid for the financial instrument that you like. And then you could work your way out of trouble. But you are in control, and it's your job and your responsibility, and you have the power. Hey everybody, below this video is a button, and I want you to click that button and get on in the webinar where me and my friend Roger show you these jump trades. I just closed a 54% gain that was open for 3.5 days. If I hadn't closed it yesterday, it'd be up over 100% right now. We just also got a message from Steve. I can't believe the jump trades I'm in. One trade from yesterday and I'm up 58% in a day. I feel like I'm dreaming. That was just from one of the options trades inside of the jump trades. Once again, if you click the link below, you'll get in that webinar. I don't know how long that's going to be up for. And then Jaifu wrote and said, a profit of $2,080 on my first trade. It's a miracle. You're really a financial god. He's talking about Roger. He's not talking about me. Finally, the expert who I've been waiting for. I am so excited to bring you jump trades with my friend Roger. We take all of our combined 45 years of trading experience all into one strategy. Jump on over, click the link below, and check it out. Hey, it's Rob Booker, everybody. Thanks for watching this video. If you want more great content and you're on the Booker Wealth site, go to the bottom right of this page and just watch more videos. I got a ton of them. Or if you're on the YouTube channel, just hit that subscribe button and the bell, and I'll let you know when I make new content. I love you all. Have the best day ever.